you always say invest in what's scarce, which I completely agree with. And the other thing I like to say is invest in things that you can't print. So, you can print dollars. You can create a stock or ETF out of gold and all kinds of things, but you can't print gold. You can't print oil. You can't print trees. You can't print real estate. So let's talk about what's invest in what's scarce. So what do you mean by that?
Oh, I love that. And we're so aligned on that. If I have any one investing theme, it comes down to one word: scarcity. Yeah, I like to invest in what's scarce, not what's abundant and can be printed. You don't even have to print anymore. It's just a few keystrokes. And things like dollars and additional stock shares, abundant things, they can just be conjured into existence. So I avoid what's abundant, like dollars and stocks, and I focus on investing in what's scarce and is difficult to produce more of, and take real world resources to produce, which is for me, it's real estate, gold, and Bitcoin. That rounds out my scarcity theme. Why real estate? It's a wealth builder. Really, gold and Bitcoin are not proven wealth builders. I think gold and Bitcoin are maybe good places to move some capital once you've built it. Gold and Bitcoin can be good stores of value. Gold, really the classic store of value, and Bitcoin, the real risk. But real world resources to produce. They're all scarce, like we talked about the low supply of real estate. It has utility, meaning usefulness. And when you buy a piece of real estate, a lot of people don't think about it this way, but break down all the commodities that you're buying when you buy a piece of real estate, from drywall to gypsum to copper wire to glass and all those sorts of things. It takes real world resources to produce that real estate. Real estate gives you advantages that gold and Bitcoin don't, like a reliable income stream and the ability to use leverage and terrific tax advantages. So that's why I'm a real estate guy. That's scarce. Gold has a scarcity. What's really special about gold is it's one of the few things that's had enduring value for millennia, about 5,000 years. You can say that about exceedingly few things. I guess you could make jokes about its intrinsic value. It's really not used that much industrially, but people have always flocked and gravitated toward that during times of uncertainty. And there's low supply inflation on gold. It is very difficult to mine 2% more gold than it was the previous year. There are just challenges from exploration to mining in creating much more of this gold. And then thirdly, Bitcoin. You might not be that familiar with Bitcoin, but it takes real world resources, hardware, software, and electricity to bring more Bitcoin into existence. There will never be more than 21 million Bitcoins, so it has a fixed supply. You can't quite even say that about real estate and gold. A hard cap, a fixed supply. More than 19 million Bitcoin have already been mined. It's truly scarce. And Bitcoin does have a role. It has some downfalls too in case the government cracks down on it. I think that's the big risk with Bitcoin. But gold and dollars each have their downfall. It's difficult to transport gold across space due to its weight and its volume and security problems. And then dollars, you can't transmit dollars across time due to inflation. Bitcoin is that one store of value. It's still volatile. It's still got some problems there, but it's the one store of value that you can transport across both space and time. You can't say that about dollars or gold. I'm a real estate guy. Real estate, I think of it, Ken, as real estate is old and slow and analog, and Bitcoin is young and fast and digital. So it is kind of a counterpoint to the real estate with the Bitcoin. But if you need to build wealth and you don't have it yet, it's really difficult to invest in an asset class outside of real estate. Wealthy people's money either starts out in real estate or it ends up in real estate.
Yeah, it's true. Yeah, I personally, I'm a big gold guy. I love being able to just throw a couple coins in my pocket and fly to wherever I want and pull them out, and there I got $4 or $5 grand.
It's something tangible. You can actually look at it. It's nice.
It's kind of nice to have that, and I don't particularly look at it as an investment.
Right.
I look at it more as a hedge, an insurance policy, maybe a hedge against the dollar.
Yeah, it's sort of like money insurance. I agree. And really, a lot like an insurance policy, you hope you never have to use it,
Right.
just like you hope you would never have to sell your gold. It's good money insurance. It's not a wealth builder in my experience. It really just generally tracks inflation over time.
Which is a good thing, by the
good
way, and especially now. I think what's interesting is, have you had a chance to look at how much gold the central banks have been buying?
They really have.
So this is a really interesting point before we wrap up. So as you guys might know, central banks are in charge of printing money, basically. Well, other things, but that's one of them. So, and they're kind of upset at the U.S. dollar right now.
Yeah.
Because, the world trades in U.S. dollars, and they're sitting on U.S. dollars, and as we inflate and print U.S. dollars, it looks like that a lot of them are buying gold, right? And I would, if they're trying to store their value in something that something other than dollars. I read an article the other day that said that we've been weaponizing the dollar against the rest of the world, right?
Right. So many foreign central banks, China, Russia, and many more, they've really been loading up on gold these past few years. You see more and more international trade agreements, like you alluded to, cutting out the dollar and going through the yuan. You had the war in Ukraine. All these things increased geopolitical uncertainty, and that's why gold was on a tear and went over $2,000 recently.
And then BRICS. BRICS is showing up, That's the Brazil, Russia, India, China, and South America, right? So and South Africa, right? And I think there's 30, 40 countries now have joined, something like that.
Yep, there's more and more, and they're not pals of the United States.
No, I don't know if you guys are watching this stuff, but it's something you have to watch. I mean, because your hard-earned money is yours, and so you have to be a steward of it. You have to look at this stuff. It's not conspiracy theory stuff. You just need to go out and Google this stuff, and you'll see. Last Thursday, we did a show on BRICS with Robert Kiyosaki and George Gammon on exactly, is the dollar doomed? I don't know the answer, but I do know that you have to keep your eye on this stuff, right?
Well, I'm glad you bring this up, because one can speculate, one can make projections, but one of the few things that we do know, and this is central to every investment that you make, is that the dollar is going to continue to be debased. At what rate, we just don't know. But there are a few guarantees in life, but that's one thing that's virtually guaranteed. And really everything that we're talking about here hedges you against that. And again, dollars and stocks can easily be printed. We want to stay out of those sorts of things.
And if you can fix your rate while the government debases your dollar, you're winning.
That's a winning formula. For every $1 million in debt you have, with just 5% inflation, you only owe the bank back $950K after 1 year, because wages and prices and everything, salaries are all higher. And with real estate, it's while your tenant pays all the interest for you while you're enjoying that debasement benefit. It's definitely counterintuitive. Get more debt. Debt's one of my favorite four-letter words.
Well, good. Keith, this has been awesome. So what's the best way people can reach you? I know I listen to your stuff, but I'm not sure everyone knows.
The Get Rich Education podcast and Get Rich Education YouTube channel. Real estate pays you 5 ways at the same time, just regular buy and hold real estate. And it's actually okay that we didn't get into that, because I made a free course with 5 videos, one on each of the 5 ways just regular everyday buy and hold real estate pays. And we're giving that away free right now at getricheducation.com/course. So it's the Get Rich Education podcast and YouTube channel. And again, that free course, Real Estate Pays 5 Ways, which really reinforces why real estate is that generational wealth builder, is at getricheducation.com/course.
Awesome. All right, buddy. Well, always great seeing you.
Love catching up, Ken.
Thanks for coming in.